Sir, I am not visible, na?
No, no, just a moment. I am doing this tweaking YouTube.
Yes, sir.
Then I will come back to the screen.
Yeah, sure.
No, you are not visible.
So what I should do to make
You
myself also visible?
uh, Actually, you have to change your mode in yourself. Just a moment. I will do one thing.
Yes, sir.
Just a moment.
Yes, sir, sure.
Yeah, good evening, everyone. So, here is Dr. Ritesh Dikshit, a young anesthesiologist and having lot of knowledge about the equity. So, he is going to share his knowledge to us today. So, I request Ritesh begin his presentation.
Good evening, each and everyone. First of all, thank you very much for joining us in the evening. Basically, I don't consider myself as expert or whatsoever. I only think that I have read something, I have learned something, and I should share that with others so that others also can be benefited. Right? So, as we all know that right now equity is the flavor of the season. So everyone is interested in equity. So I'm going to today cover a few aspects of equity where everyone can be benefited. As it should be, it's a disclaimer that whatever I'm saying here, whatever I've studied in my life or whatever I feel like, I'm just sharing it with it. You may agree to disagree, you may not agree much, but main thing is that we should share knowledge. So, just a brief why doctors should be interested in all these things. These are the 5 points which are going to make life economically very difficult for doctors. With the increase, disproportionate increase of medical seats, there is going to be so many undergraduates and postgraduates that the competition is going to be huge. Then, the non medicos, if they are owning the setups, they will be calling the shots. Doctors will become inferior or secondary in cost. The problem with Ayushman and other government scheme is that not a single scheme put doctor in center. All the schemes are actually harming doctor economically. There will be a drop in quality, so everyone will fight very nastily. And last and not least, as we all know, as anesthesiologists, there are already reduced opportunities, reduced remuneration, and the final nail in the coffin will be the lack of financial planning. So, what to do about it? That is a very simple question and a very simple answer. Let's become rich. I'll just share my view. Why? See, usually a doctor is a person who is from a middle class family. He is very intelligent, he is very hardworking, and that is his problem sometimes. So these are the five hurdles which I feel stops doctor from becoming hugely rich. We should fall, we should get inspired by our parents, but we should remember always one thing, that the parents were there in our stage around 30 years back. So we cannot follow them blindly, especially in financial decisions. Orophilia. We have got such a great affinity towards gold that we get very mental towards it, very mentally attached to it. And that is the problem, because gold is a notional advantage. I'll just give an example that you cannot sell gold to buy a Samsung Galaxy Fold 6, but you can sell some shares to buy it. So, holding gold gives you a notional activity that yes, I'm very rich, but it does not give you in hand what I call is liquidity. Then LIC and ULIPs, it's very obvious. They are wealth destroying, so no one should go for it as the first choice of investment. Loan traps. And finally, and most important, always thinking that the money is bad, money should not be earned. Arey itna mil jaye to bahut hai. You should be very satisfied with what you got. I call them as middle class moral values, and people should get away from them as soon as possible if they want to become rich and financially independent. So, giving up this context, what I think about, I'll jump directly to my favorite topic, and that is CAGR. What happens is that everybody knows about CAGR, but nobody talks in terms of CAGR. For example, there are two people, both have bought a house, and one has earned get the house for 10 lakh rupees. The other person has got a house for 10 lakh rupees. Now the one person says that I have now my house is worth 14 lakh rupees. Other person says, "Are ye to kuch bhi nahi hai. My house worth is 20 lakh rupees." The first question anyone should ask is that after how many years? So if that 10 to 14 lakhs has become in 2 years and 10 to 20 lakhs has become in 20 years, that as per CAGR, the first person will be the winner. But we only usually rely upon the absolute terms. So the spectrum of CAGR. So let's do an exercise. This is one of my favorite exercises, and people who I've talked with earlier may feel it a bit repeat, but for newcomers it will be very interesting. Everybody knows that we use SIP calculators. So this is a exercise based on that SIP calculator only. So let's take a fixed amount of say 10,000 rupees per month or 1.2 lakh rupees per year, and calculated returns with financial instruments, various financial instruments over a period of 20 years. Okay, so let's jump into it. So whatever slides we are going to go through next 4 5 minutes, they will be showing the same calculation. That is 10,000 rupees per month saving, 1.2 lakh rupees per year for 20 years. So the around 24 lakhs. Let's see how it goes. Old favorites, bank accounts, FD, PPF. I've taken the CAGR 467. Amount invested will be same, 24 lakhs. Now see the difference. The moment the CAGR changes, the maturity amount changes. So the bank account gives you 36, FD gives you 46, and PPF gives you 51 lakhs over the same amount of investment, that is 24 lakhs. So just seeing that from increasing CAGR from 4 to 7 increases the maturity amount on the same amount invested from 36 to 51. So that is the what I call as magic of CAGR, compounding. So that's why it should be called as the eighth wonder of the world. Very interesting, though I don't personally prefer it, and I've almost stopped doing PPF. But just give you an exercise that suppose usually we what we do is after 15 years we close the PPF amount, so PPF account. Some people don't close it. So if someone extend that account from 15 years to 20 years to 25 years to 30 years, so that amount, that corpus created increases from 40 lakhs to 1.5 CR. because now after 15 years, the CAGR is applied over the amount of 40 lakhs which has already been created there. So it's just wonderful. And just by holding it for 15 years, of course, investing also 1.5 lakh rupees a year. So after an investment amount of 45 lakhs, your corpus increases by 1.5 CR, though you have invested only 22.5 lakh rupees extra. So the amount invested will be 45 lakhs. So if you just hold the PPF account instead of 15 years, 30 years. But my problem is that even after holding 30 years, I'm only getting an amount of 1.5 CR. And why it is so? It is so because the CAGR of PPF is up to approximately around 6.5 to 7. So the main issue should be that if we don't increase the CAGR, then we can't create a big corpus. Another exercise, another common problem. My wife says, let's buy gold of 20 lakhs today so that 20 years from now can be used for the marriage of kids. Right? Very nice. So let's assume that it becomes 80 lakhs of gold at that time. Happy? 4 times. I don't expect it to increase 4 times, but anything can happen. So even if it goes 4 times, so it becomes 80 lakhs gold. So we'll be very happy that isme banwai वगैरह and all that will be exited, but still 80 lakh rupees gold. Now suppose you grow it at the CAGR of 15 to 20% range. So pre-tax returns at 15% it becomes somewhere around 3.8 CR. That is 80 lakh rupees you will get as a gold and 3 crore rupees as bonus. If you are good, and as I will show in future slides, how you can increase your CAGR. So if you grow it at 20%, then the amount can be 9.9 CR. So you take that 80 lakhs for the gold and still you are left with 9 CR. So that is the magic of compounding. Even if I say that the gold becomes 10 times from here, 10 times, so that 20 lakhs will become 2 crores. So even after that, we will have ample amount of money left. So that is the magic of CAGR. So instead of buying gold, either buy gold ETF, whatever it is, but don't buy physical gold. If you need it 20 years from now, invest that money somewhere at with a good CAGR, and then we can have lot of fun. The most what I can say that something which everybody knows, and that is mutual funds. So you can see by the calculation speaks for itself. So if you continue the CAGR, SIPs, and you have a CAGR of 15 to 20%, so that 24 lakhs invested over 20 years becomes 1.3 and 2.5 CR respectively. Suppose someone has 20 lakhs right now, 24 lakhs right now, and they do it, nahi, aaj hi invest kar dete, and I'll not look at it for next 20 years. Then that amount, because your starting amount is big, so so the CAGR rotation will be big. It will become 4 CR and 9 CR. So that is the magic of CAGR. So how we can increase CAGR? Another one which usually people do in equity is buy and forget. I have bought Hindustan Unilever, I have bought say HDFC Bank, I have bought Reliance, and I will give it to my kids, legacy shares. It's very nice, no issues. My problem becomes is that suppose you are selecting a bouquet of shares, right? If you study which shares were there in Nifty 50, say 30 years back, you'd be surprised that only 15-20 shares are there who are there still there in Nifty 50. So all others have either exited or have become wealth destroyers. Even in the last bull run and now run, the leaders are different. So you cannot just keep on holding, buy and forget, because it is highly unpredictable. And you may have a few ultra multi baggers. For example, right now I feel that Bharti Airtel is one of the stocks which, if you go on continually accumulating on every dip, it is going to give you wonderful returns. But suppose along with Bharti Airtel, you say choose JP Power or some other stock, then it becomes a problem. So buy and forget, I feel that it will match only the index return of 12 to 15%. So अगर 12 to 15% के लिए मेहनत करना है, so it is better that you invest in mutual fund directly. There some professional person will be handling it and things will be much more easier. Now comes an interesting part. Suppose someone is investing actively in equity and they are able to generate 2% per month only, nothing big, 2% per month. But that 2% per month becomes 24% CAGR per annually. And that 24 lakhs becomes 4 CR. But I have just told that we can increase CAGR like anything. So right now, no one should get excited by the coming slides that, array, so much money can be earned. This is a theoretical exercise. And to replicate it as it is difficult. But just try to appreciate the magic of CAGR, that if you invest your time and money and your knowledge, how much you can earn. The sky is the limit. How the sky is the limit? Let's increase the CAGR. Suppose I increase the CAGR to 5% per month. So this 5% per month becomes around 60% per year. Of course, it looks very big. But if you see in the terms of swing trading, people who are investing directly in equity know that 5% trade can be taken in a month. It's not a very difficult task. Now, suddenly things become interesting, and that 24 lakhs can become in 20 years 332 CR. Even if we can replicate it so much that two of the digits in this figure, any two digits can be given to us, then any 33 or 32 or 23 CR, I think it will be a dream come true and will become top 0.01% country's population. Now let's increase it more better and say you are so good that you are able to take a trade which gives you 10% per month. So that comes to around 120% per month, 120% per year. And that, my dear friends, increases the CAGR to a whooping 123,450. It may feel like a fake number. I checked it again. You can put it in a SIP calculator with a 10% per month and a 10,000 rupees per month. That is around 1.2 lakh rupees a year. 24 lakhs over a duration of 20 years can become this figure. It is huge. Can it be done practically? I don't think so. It will be thought. But just see the theoretical comparison that if someone is really interested, what is the sky is the limit? Even if you get 10% of this amount, that becomes almost, let's say, one tenth, 100, anything, 123 crores or 12 crores. It will be huge for you. So definitely you'll feel nice, ki, arey, so easy, let's do it. Why not? And there comes the biggest devil of all. Why devil? Because it is a two-edged sword. And that is, if swing trading, equity trading, so can give you so much return, then what about the great devil, future and options? How much numbers, how much results it can give you after a wonderful CAGR because they have. It will give you a cardiac arrest. If I reveal the figure, so I'll not reveal the figure. You can go into the SIP calculator and you can say that if you earn say 10% per day, then what is the return? And you will be surprised at the number of zeros and everything. So in a nutshell, what I'm trying to say here is that, as we know in anesthesia, that cardiac output is equal to stroke volume into heart rate. And we also know that we cannot increase the stroke volume beyond a range. So what we can increase is the heart rate. So here the heart rate is CAGR. The more you increase the CAGR, the more will be your corpus at the end of the years and you will have fun. So what I'm trying to say? I'm trying to say is that for increasing the CAGR, you have to invest directly into the stocks, because mutual funds and all the others, they will have their own problems, that whether you can choose it. Mutual funds will have a limitations on the upper side because they have to deliver results, so they cannot give. So either you can have a multiple avenues to increase wealth, and one of the easiest option in investing is in equity, directly and indirectly. Now the biggest dilemma is which option to choose. Many will ask me, or they will ask themselves कि हमें करना क्या चाहिए. There is no clear cut guideline that this a person should do this type of equity or that type of equity. So I have, on my own experience, I have tried to simplify it. Now how I am simplifying it? Very simple. Just ask yourself how much, just ask yourself how much time you can invest. And that's all. Nothing else. See, everyone has a desire to become rich. So that is not a question. That desire is not a question. But how much time you can invest. So suppose you have no time to invest at all. Don't go for direct equity. Go for mutual fund SIP and you will be handsomely awarded. Suppose you say, okay, I can invest, say, spare 2 to 4 hours a month. A month. So what you can do is that you can uh, take positions, buy and hold blue chip stocks, good stocks based on your own charts. But the candle you'll have to use is monthly. Why? Because you are seeing once a month. 2 to 4 hours a month is a very small time. Then if you can invest at least 10 to 4 hours a week, so then you can go for long-term stocks and positional trades. If you can invest or you can spare 2 to 4 hours a day, then you can go for swing trading. But if you can invest time more than 4 hours a day, then my dear friends, the sky is the limit. You can do anything and everything, right way from holding blue chip stocks, swing trading stocks, then taking regular positions, trading future and options, currency, commodity, and whatever they found. I think this slide should guide you or should help you to choose what you exactly can do. Look at this slide. This is a slide from financial quadrants of rich dad, poor dad. We fall into one of the quadrants. Either we are employee or we are self-employed, or we are business owner or we are investor. The CAGR increases exponentially through quadrants. But you cannot go through quadrants automatically. You just cannot go through your quadrants automatically. You'll have to work very hard. Employee, first quadrant, easiest part. Anybody can do it. Self-employed, freelance anesthesiologist is sort of, I consider that as an employee job only. Because self-employed is one where you open up your own clinic, where you have your own hospital. If you're doing that, then it's very nice. Business owner is that next step, and investor is next step. So if you want to increase your CAGR, you'll have to go through all these quadrants and increase your CAGR. Before going to next slides, that how basic of chart analysis and Dow's theory, I would like to say a few points about money. The slide heading tells you everything, that money isn't everything, but everything needs money. So anyone who is saying, I always say, only rich people deserve to say that money is not everything. Like on a lighter note, I always say that only winners of Miss World and Miss Universe competition deserve to say that beauty is not everything. You should never work only hard. The laborer also work very hard. Why they do not become rich? Because they are not working smart. Religion, moral values, luck, fate, it cannot make you rich. So what can make you wealthy? Of course, equity can make you wealthy. But equity में कैसे wealthy? This brings to my one of the founding principle of my life, that for achieving success in any field, for achieving excellence over any skill, you only need two things in your life. Number one is the desire. You should have a very strong desire. If you don't have a desire, you will not be pushed towards the direction of your success. But once you have the desire, then you'll have to employ time. See, I'm not saying that you should have talent, you should have skill, you should have luck. No, no, no. That all can be done if you have a desire and you employ more time. Right? Just look at your lives. We are all become doctors only because we had the desire to become doctor. And then we employ so much time, so much energy in that, that now we have become successful doctors. So it's elementary. When you have more desire, you employ more time. More success come to you. That success actually gives you more desire. So you employ more time. Then more success is there. Then more desire, more time employed, more success. So it is what we call as the positive feedback mechanism, just like anesthesia, right? So the success drives your desire. You employ more time. So in equity also, as I've already told in one slide, if you employ more time, you'll get good returns, more returns. If you employ less time, you'll get less return. And the amount which you can achieve with this is just insane. 10 CR, 100 CR, 1000 CR. Earlier CAGR calculation were more theoretical. But you can see that Rakesh Jhunjhunwala, when he died, he almost earned 30,000 CR only from equity. So even if we keep that as an example, that is very more than enough for us. Which brings us to the second part of my slide, my presentation. See, here I am assuming that uh, whoever is listening who knows that there is a chart, there is a candle on the chart. You see candles on chart. Candles are usually of daily, weekly, and monthly duration. How they are formed. Because if I start speaking about that, then that will take another 1 hour or so. So I'm assuming that everybody knows a bit about candlestick chart and action. I'm just telling you what to do with that chart. Once you have opened the trading view chart, now what you have to do with that? So what is technical analysis or charting? It is the use of price action. A stock has a price and that is depicted on the charts. So we have to understand the chart in such a way so that we can make money, right? Here everything is clear. So for higher returns, you have for higher CAGR and for higher return on cash employed. But how to do it? So I will give you today the most basic trading technique. If you'll think in a very easy way, it's one of the easiest way to understand charting and to take trades. So how one makes profit in any business? He buys something at a lower price and sell at a higher price. Same is true in equity also. But the problem is that how to identify that the price is low enough for entry, and how to identify that now it is a good price where we should sell or exit, right? That is the $1,000,000 question. So I'll try to explain you the basic mechanism or the principle behind it, and I hope that I can convey something which if you will apply with your own system and strategy, you will have huge success. So let's go on the journey of charting and technique and everything, and I'll try to make it as simple as possible so that even a novice who just knows what is a chart and how to open it on trading view can easily explore through it. So this is based on Dow's theory. What does the Dow's theory says? Dow's theory says that when a stock price is falling down, right? So it is making LH, which is lower highs, and lower LL, that is lower lows. What does it makes? What does it make says? It means that when the stock price is falling, every time when it goes, try to go above, it does not go to the previous high, but a lower high, right? And when it falls, it does not falls at the level of the previous low, but it falls lower lows. So there will be a series of lower highs and lower lows when a stock is falling. आई होप दैट आई मेड माई सेल्फ क्लियर कि वो नीचे जब गिरता जाएगा तो वो लोअर हाइज बनाएगा और लोअर लोज बनाएगा, राइट? एंड देन इट विल गो डाउन टू द बॉटम and then it will consolidate or rest for some time, because a stock price have to go back, but we will catch it only when it will start going back. We will not try to catch the falling knife, that if a stock is falling, then we just go on adding on dips, and that dip becomes deeper, 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 and after some time we are in so deep that we are just out of equation. So we'll not do that. So we'll even wait for this bottom consolidation also, and after some time the stock will start rising again, and it will now make new higher highs and new higher lows. Means now when it will make a swing high, it will be higher than the previous high, and when it will make a low, it will be higher than the previous low. So there will be a series of higher highs and higher lows, right? Okay, now if we connect all the lower highs, we get a trend line which is showing us a trend. As you can see, the trend is downwards, so that's why it is known as a falling trend line or FTL, right? And we get and if we join all the higher lows, then we get a rising trend line. Now you can easily see that wherever the falling trend line ends, we will enter. And we will continue in the trade till the trend is continuing. That is, the rising trend line is maintained. And when you draw a rounding bottom around it, it becomes a rounding bottom. This is one of my favorite, and it's one of the most consistent chart pattern that you can give. So this guides us to very simple, and this is the final, that whenever the trend line, that is the rising trend line, is formed and the falling trend line is broken down, that will be your entry point, which is known as buy low. And if you will continue till either the previous high or till the rising trend line is continued, and that when you exit at that point, it will be a sell high. So you will buy low and sell high and will make money. So this is, I hope that I have tried to make it in a ray diagram so that it becomes easier to understand, right? So how does it look on charts? So say our favorite Asian Paints, right? So the Asian Paints, this is a monthly chart of Asian Paints, and you can see that if you draw, you can clear cut get the rounding bottoms, 3 rounding bottoms over a duration of 2 years, right? Okay. But as I've already told that there should be a falling trend line and a rising trend line. So this is a monthly chart. Let's go to the weekly chart. That's why I told you that if you are investing in once in a month, 2 to 4 hours a month, then you will get the monthly chart only and you'll have to be satisfied with that. But if you are giving weekly charts a view, then you can see that on weekly charts, there is a clear cut falling trend line and rising trend line, right? But I talked about something known as higher lows and lower lows and higher highs and higher lows. There it is. This is how you will mark your, the red arrows are the lower highs and lower lows. They go into a range and then they start going up again with higher highs and higher lows on a daily chart. And if you draw, as I've already told, a simple 2 trend lines, it's a matter of 2 trend lines, and you get an exact entry where the falling trend line is being broken and the rising trend line is being formed, right? So let's do it. A very simple calculation, a fast calculation. Suppose in 2 years you are able to take 3 trades of Asian Paints based on these trend lines. So it becomes 25% each year, but you are investing your money only for half of the time, because half of the time your money will be with you when the Asian Paints is falling. So you'll invest it somewhere else. So you'll get 25% from somewhere else. So in 3 rounds of 25% each, so it gives you approximately 50% per year. That's why I told you. Now, if suppose we divided it by half also, then also we will be able to secure 25% per year. And that is huge return, as we have already seen in the slides of CAGR. Now, what happens that if it is not in a range and it does not stop at the completion of previous high, you just go and continue holding it. Like this is the Godrej property chart, and you have around 1 month chart, and you be happy with it, right? And you'll keep on adding at new higher lows. So you know that the trend line is there. You know that the stock is making new higher highs and new higher lows. So you'll just keep on adding at higher lows till that rising trend line is maintained, and you'll earn huge profits. What about a stock which is in uptrend like Trent? Don't do anything. There also just keep on holding till the trend is continued, and whenever it gives a dip, you add on dips. Or suppose the stock is in a high, but it gives huge pullbacks. Like, for example, it goes in a very huge direction upwards, then it falls on the trend line, then it goes back again. You do nothing. You add on every pullback because the trend is continued. See, in equity market, we call as trend is your friend till it bends. So you'll have to continue with the trend. Don't fight with the trend. Don't try to catch the falling knife. Don't go on averaging on dips. It is very difficult and it will give you a lot of pains. I have learned from my own experience. I have given so much money, so much time, and so much mental energy, blood and sweat to the market. After fighting for so many years, I have understood that you should not fight with the market. So whatever market says is correct. Bhav Bhagwan che, right? No argument with the market. Now I'll almost at the end of my presentation. So I will give you a very decent example, and that is everyone's darling HDFC Bank, right? Just look at its slide. It's a continuous uptrend. It's a very good stock, but for last around 4 years, it is going in a range only. So, for example, suppose we hope that someone has bought it near base at the price of around 1300. So, in 4 years, yeah, that person must have earned only 30% absolute return. And 30% looks very nice for 4 years. But if we calculate it into CAGR, it comes to only 7% CAGR. And now it is HDFC Bank. At least it is not falling. But suppose if someone would have hoped कि नहीं ये इससे ऊपर जाएगा, and believe me, today it is showing a breakout chance, so it will go to 12 to 2000 rupees in next few months or whatsoever. But if someone has bought at 1700 in last 4 years, at least 3 times his return must have been negative when the stock has traded from 1700 to 1300. So for buy near high, it will be zero or even can be negative. Now see it from my perspective. What if? What if we would have done only 3 trades in CAGR, 3 trades in HDFC Bank in last 2 years, 4 years. So if we have done 3 trades, means 2 years our money would have been free. So in 2 years, absolute return would have been somewhere around 80%. And the CAGR would have been 35%. Just imagine, just by changing your strategy from buying and holding, or doing a very non-active, non-proactive trading, and shifting to a bit of active trading, your returns just explode. Of course, whether they will become or not. And with this, we come to our last slide of the presentation, which will tell you, wake up. It's going to be very difficult. The inflation is rising, the price is rising, there is so much competition. I've already told everything. If you die middle class, it's your fault. If you don't want to do it only for yourself, do it for your kids. Aim higher. If you aim for 1 CR, you get 50 lakhs. But if you aim for 10 CR, at least you'll get 2 CR. So always aim higher. Always spend and enjoy a part of your profits. I'll again request you all to see into this financial quadrant, because where you land up, it's upon you, nobody else. So you'll have no one else to blame if you end up less rich or compromised or economically or whatsoever. With this thought, I'm highly thankful to Dr. MaheshSinha sir for giving me this opportunity. People who are already with us, and I can see Dr. Rajnikant Gujjar sir is also there. He has been very nice to me. Dr. Viren Sharma, Dr. Pankaj Gupta sir. These all people have been doing what was not taught in medical school, and that is like कि पैसे भी तो कमाने पड़ेंगे ना, सिर्फ इंटेलिजेंस और एजुकेशन से कैसे चलेगा. So earn good, earn well, love money, and invest in one form or the another in the equity. Otherwise, winter is coming, and winter is going to be very, very harsh for all those people who don't love money right now. Thank you very much for patient hearing.
Thank you, Ritesh. Thank you very much. There is one question. How to draw line? Join body or tail tip? If anybody want to ask any question, they can unmute and ask.
Hello,
Yes,
Yeah.
sir.
good evening, sir. I'm from stock group only. Just want
Okay.
to know that how you draw that trend line, attach body or tail tip or top, or
See,
body top or body down.
right. Uh, Ideally and classically, always and always, close should be considered. Right? Hello? Am I audible to you?
Yeah, yeah, you are audible.
Okay. So, uh, ideally, the wicks or the shadows, which we call them, they are the intraday or during the candle formation fluctuations. So, the fluctuation should not be considered, only the close should be considered. We have seen many a times that during the daytime also, during the month also, during the week also, the stock will show all sort of volatility and finally end up at a specific price, and that we known as the closing price. So the closing price is the price at which all the participants of the market have agreed that this is the correct closing price for this stock for this time duration. So we should always consider the reliable method will be uh, taking the closing price of the candle into consideration while drawing trend lines.
Uh, Rajnikant sir, you want to add something? Your vision?
Yes, I'll just give few words about the direct equity. There are two types of direct equity investors. One is one with a sheep mentality, that is SHEEP, that they follow the herd, and the others are the eagles mentality, means they fly at a high altitude, and whenever they find an opportunity or whenever they find a prey, they come down at a lightning speed, they take the prey, they take the opportunity, and then they go fly at the high altitude. What do I mean by high altitude? High altitude is one needs to develop the knowledge, the sound base, wisdom, the way Dr. Ritesh Dixit must have put number of years, number of decades in learning these heights. And usually we, the colleagues, we want to know what is to be done. We don't want, we never ask how it is to be done. We want to know, just give me few names of few scripts. It is not like that. You learn how Dr. Ritesh Dixit comes to a conclusion, how Ritesh Dixit follows this particular strategy. That is how is more important. It is not what is that is important. In CMEs also, when we go and we meet the experts, we do not ask what they do, but we ask them how they do it. So my advice to all our colleagues is to develop the eagle's mindset. Get out of the sheep mindset, because sheep generates the wool, but it is always for shearing by the owner, one or the other way. Dear colleagues, capital markets, they drive on the four pillars. First is the fundamentals, another is the liquidity, third is the sentiments, and the fourth pillar that is not said but it always exists is the manipulation. There always is an element of manipulation. There always is a scam. So you should be well prepared to identify the right opportunity, and technical analysis is the only branch, or it is the only opportunity that gives you to identify whenever if some manipulation is also being done. I am not very sound about it, but I think that those who are good at the technical analysis, they must be able to find out if there is some element of manipulation or not. So basically, try to develop the wisdom, understanding in the direct equity rather than just following the trend lines, asking somebody basing on the tips on many. Then you are subject to manipulation rather than really getting benefited out of it. This is what my understanding. I do admit that I do not have direct equity exposure. I do not have sound knowledge in the direct equity. I do not have sound knowledge in the technical analysis. But as a keen observer of the personal finance, this is my impression that I have shared with you.
Absolutely in agreement, whatever Sir has said, and everybody will have to work hard on themselves. And the biggest thing is that everybody will have to work for themselves. Nobody means we always tell in our equity, like everybody asks, हाँ ये तो हो गया लेकिन बताओ कि कल कौन सा stock चलेगा. Like there is a very old saying that don't give fish to a hungry man, only tell him how to fish. So then he will be happy with his fishes for the rest of his life. So here also draw your own charts, then you'll not have to ask anybody where I have to invest or which stock I should pick or whatsoever.
Yeah, we have got Pankaj and Viren also, if they want to say something.
Yeah, Ritesh, you were spot on as always. And actually, I've been more of a long-term trader, but looking at your this one, I feel even I'm a little excited, and maybe I'll try to go in for short-term also now, because my trading, I've hardly been able to do any trading. But I feel if the returns are as what you have really suggested, it will be good. What me and Virendra feel very happy about is when this PPF movement started, we were, skeptical how things will go. But I feel so happy that today we are having so many webinars just on investments. When the alternate source of income for any anesthesiologist is so important and so vital, it is being carried over all over the country, and I feel really happy about it. I feel Dr. MaheshSinha is doing a good job by continuing the CMEs, and I feel even as ISA and PPA, we will obviously be continuing the same thing over the next few years also. Thank you, thank you. Please keep up the good job, Ritesh.
Sir, it's all credit to you, MaheshSinha sir, Viren Sharma sir. If you would not, people, senior people like you must not have taken the, I must say, everything. You moderate the groups, you keep everyone in line, and you remove the nonsense and everything and take all the pains on yourself. So, because of that, only everybody is getting encouraged and we are getting good results.
Yeah, and I realize most of the people in the group are very positive, and the one biggest thing that I've learned on the group, but everyone has learned is patience.
Yes.
I mean, I
See,
used to see that everyone used to be very bogged down the moment something went down. But now I see the discussion on the group that no, it's fine. We are used to it now. We are not tempered people. We know how to manage the market. Now, even in this fall in the last week, I don't think anyone in the group has done any panic selling. One of the most important things which all of us should know: never sell in panic. Always wait for the right time. Follow charts as much as you can, and I feel the returns are definitely going to be much more than what we can earn from our professional in the long run. Thank you, sir.
yes, sir. During the last week's fall also and previous falls also. So our group only have two type of emotions. One, even if we are posting our PF losses, we are posting it with a smiling emoji. And
Yes,
when the market is going good, then Viren Sharma sir's favorite rockets are flying all over the charts and everything. So that is good. And really no one has done the panic selling because the market moves like this, only zigzag and everything. And today it is again, means I was worried that I will tell so many good returns from equity, everything, and market is already falling for last 4 to 5 to 6 days. And everybody will say, "भैया अभी तो पैसे बहुत कम हो रहा है." So how it will go about it? But fortunately, market saved me today, and it gave some respite to everyone.
I know.
Yeah, Viren.
Yeah, good evening. Congratulations, Dr. Ritesh. Gradually, you are becoming a good teacher. I mean, we've been now hearing you for the third time. Indore I missed, but you came in Daman also. I can see that it's your passion. You enjoy sharing your knowledge. A few thoughts I would like to share. Actually, what I have experienced in the last 3 4 years is that majority of the members still they want is that let someone tell, okay, buy this. This is the price at what you buy. This is the gain you are going to get, and this is your stop. So, but having been in touch with those who are for years and who are really earning huge profits from our group only, the thing is one has to put his own hard work. There is no escape for that. Ready-made, see, maybe the market is going up, you may make money, but then you land up and you are stuck up also because you purchase at that high, which price it may take years also to come back. So technical analysis, what I feel is gives you a clear-cut indication when to enter, when to exit. I think there cannot be a better analysis or timing when you have to enter and when you have to exit. So basics of technical, I think this candle chart is very basic. It's only a mental block in our mind. Even if you give some time, you will learn it.
Yes,
And
sir.
these lines and all what he has taught, these are not very difficult. In few days or few weeks, you will yourself understand. Okay, this is, and plus in the group, they keep on posting, just try to read them. But at the same time, a word of caution. Like I asked this question in Daman also. See, if you are a long-term investor, you're going for large caps, there is no worry. Like Dr. Ritesh also replied at that time that what to know fundamental analysis of Asian Paints or Reliance. Everyone knows. But I mean, these small companies, one must know, at least see the last 3 years financial trend, what the company is doing. You are going to enter into a stock only through technical, not knowing that this is still running in loss. Let it recover, then enter. You are not absolutely sure of that also. And third important thing is, if you really want to earn good money from stocks, you have to get updates well within time. Don't be totally dependent on the group. See, whatever they are posting, it is their analysis. There are thousands of stocks. If you develop a habit, maybe you can see on Twitter and all, or you can read in the newspapers or through Google or certain apps. See, they always tell the news, the important news about the what is happening in the market. Like a big investor is entering a stock, large volume sale or large volume he has bought.
Right.
So then you can keep it in the watch list. Try to see when you see a big candle going up. That means a big investor has suddenly entered, and definitely if somebody has entered, he is not going to waste his money. So there is a hope. Now you keep it in the watch list. So yes, you get 70-80% of the idea, the group, but you should develop a habit of your own study. For long term, see, there is no excuse. You cannot be dependent on others. You have to put in your hard work. You have to study. You have to get knowledge about what is happening. You have to learn the candlestick chart so that you know when to enter, when to exit. Rest, of course, you are lucky through group. That momentum is going on since last 2-3 years, so everybody feels it's very easy to make money. Somebody is clicking, like sometimes I write or sometimes Badresh Bhai, and 3-4 days 20% and this and that. So that is not, you are not going to get this again and again. Again, repeating, develop a system of your own study, know about the stock, know about what is happening in the market, know about the news, and definitely you should know the candle chart to have a good timing of entry and exit, which has been beautifully explained by in very short and easy manner by Dr. Ritesh. Thank you.
Thank you, sir. Just to add to your point, you are absolutely correct. And at that time, I was not able to answer it in fully, but I feel that if some beginner is going for technical analysis, so he or she should like limit themselves to either Nifty 50, Nifty 100, or max Nifty 200 stocks. So the advantage will be that they will not have to do any fundamental analysis of those companies. They are already done. They are good companies. That's why they are in Nifty 200
Yeah.
only. Even doing an analysis of 200 companies, means it is more than enough. More than enough. You'll get. We don't have that much money to invest also, so it will be very difficult for choose more companies than that. So that will be the easiest way. Or otherwise, as you have said, that if you like a company's chart, then go and search for something. There is so much data available online. So do some fundamental analysis. Look at the 3 year returns. Everything that can be done. Again, वही जितना डालेंगे शक्कर उतना मीठा.
Yeah, actually nowadays it is becoming very important for anesthesiologists, particularly young people, to have a second source of income and how to invest. You are earning, but you are not sure where to invest it. So there are different arenas of investment. One today covered by the Ritesh. As Rajni sir also said, he has not invested in stock. He is very much fundamental look into the mutual fund. So assess your risk taking capacity also. How much risk you can take easily, because as just a passing remark, Ritesh said future an option. Even NSE has issued a warning that this is not for everybody. So They come to enter here only after you understand what is this and you're ready to bear the losses also. Very important area for the anesthesiologists, as also because now with the in the health sector, the insurance, government insurance, Ayushman Bharat has taken away a big chunk. Now it is covering around 65% of the population. And what they give return and what will be your share, it is just unimaginable. So should be ready for the other avenues for getting some resource source for the income. Thank you, Ritesh, and thank you the
Thank
other
you.
people for sharing their views on this platform. And thank you and come happy Diwali, upcoming festival seasons. So everybody, okay, good day.
Thank you, sir.
Best wishes for your election, sir.
Thank you. Okay, so